Let's move on to IFRIC 17. When there is an IFRS 5 transaction and the distribution of cash and non-cash assets to its owners, we are able to identify that we need to apply our IFRIC 17 principles. An entity can distribute assets other than cash or dividends to its owners, or the owners have a choice in receiving non-cash assets or a cash alternative. Now, if they receive non-cash assets, remember dividends in specie, how do we account for this distribution in terms of this transaction to its owners? Remember, keep in mind that this is part of our IFRS 5 distribution. Now, when you look at the right side of the screen for me, please. Let's say, for example, that the entity declare one vehicle to the one shareholder in terms of this distribution, which is non-cash. What will the journal entry be on 1 March in the entity's records? Similar to a dividend, but this is a dividend in specie. They have only declared it, not yet paid. The entity will have to debit the dividend declared. This will normally be in our retained earnings account. Credit an account called distribution to shareholders payable. In your statement of financial position. But what is the value that they need to use? If we look at the principle, the entity should measure this at the fair value of the net asset at that date. Therefore, the net asset being our vehicle. Now, let's say, for example, guys, this will be 120,000. 120,000. Right. Then it is important that you identify that we need to allocate that asset to our non-current asset held for distribution. Therefore, we will then have to debit our non-current asset held for distribution. Remember, distribution to the owners. We will have to debit and take out that vehicle, let's say motor vehicle, at cost. We will have to credit the motor vehicle's accumulated depreciation. Why do we have this transaction? Because technically speaking, guys, this is IFRS 5. We need our non-current assets. Next, we are now on 30 September 2021. On this date, they decide to transfer, therefore technically pay the dividend, transfer the dividend. Now, IFRIC 17 indicates to us that we first have to remeasure this asset at fair value. Therefore, if we now identify on 30 September that the fair value of this asset will now be 150,000, we will have to debit the dividend declared and credit our distribution for shareholders. Therefore, when you look at this, well, this will be the 150 minus the 120,000, an adjustment of 30,000, and our distribution to shareholders will now be a total of 120 plus the 30, a total of 150. We have now remeasured the dividend in specie, but what will happen when we settle this dividend and actually transfer the vehicle to the owner? We will have to debit our distribution to shareholders payable account with a 150,000, because we are now clearing this account, we're transferring this. We will have to credit our non-current asset held for distribution with the amount we have recognized in our previous journal, guys. We need to clear this line item. And if there is a balance left, we will debit or credit this in our profit and loss. And we need to disclose this as a separate line item. Right, now we've looked at the journals. Let's just quickly recap the principles in our column. How will the entity account for the distribution? Number one, when there's a dividend payable, they need to recognize the dividend when it is authorized and no longer at the discretion of the entity. How will they measure this dividend? At the fair value of the net assets to be distributed. In our basic example, the 120,000. Number three, at each, and look at this, at each reporting year end, as well as at settlement date. This is important, at year end and at payment date, settlement, transfer date. They need to recognize the change in terms of this distribution in equity, retained earnings. If you look at our journals on the right side, this is where we have recognized the 30,000 in our statement of changes in equity. And rule number 4 in our column, the entity should recognize the difference between the dividend paid and the carrying amount of the net assets distributed in profit or loss, and disclose this as a separate line item in our profit or loss. Again, look at the right side. We have performed this. If there is a gain or loss, recognize this in profit or loss.